Hello, welcome to this session in the Financial Inclusion Week. Uh, Today, I'm going to talk about the impact of central bank digital currencies, aka CBDCs, on financial inclusion. Uh, A summary, central bank digital currency represent a great opportunity for financial inclusion, but we need to explore and talk about some challenges about, for example, trust, for example, governments and financial institutions. That's the idea with this session. Yeah. Who am I? Uh, my name is Nestor Campos. I'm from Chile. I'm the founder of PeerPay and Together, two companies working with Web3, blockchain, and more decentralized application with focus on unbanked people about financial inclusion. I have experience in many kind of technologies, even CBDC, central bank digital currency platforms. We need to understand about financial inclusion. We have millions of people without access to the digital economy. When I say millions, really, actually, is 1.7 billion people in the world without access to the financial system, to the traditional financial system. For example, to get a bank account, a credit card or debit card, uh, even pay on websites and more. They are using still cash. So we need to explore some problems. For example, we have for this group of people a vicious circle. Because, for example, you can think some families, or million of families, depends of a loan or credit card to pay bills, to buy food, to pay all needs every month. We find on the end of the month, they get income from informal jobs or formal jobs. With that income, they need to pay the loan or pay the credit card. So for the next month, they don't have money for the next food, the next bills, and more. They need to request a new loan to pay food, to get income from jobs, and pay the loan or credit card. It's a it's a vicious circle in that context, and it's a big problem. Here, in this context, the problem maybe is not the money itself. It's about the time of the money, the access to the money in the right time. That we call in Latin America the financial bike, because you need to move. You cannot stop. You need to move and move. Request more loans, pay. Request more loans, pay. That's how it works. Also, we have, for example, informal commerce. Millions of people without a formal job need to access to the informal commerce to sell some clothes, some foods, etc. Also, because they accept just cash, they cannot accept debit or credit card or even any electronic payments because it's not a formal commerce. The problem using cash again is very informal. The cash every year, every day, less services, less products accept cash as a currency, as a money. For example, they accept digital money because it's more secure for some commerce, and it's very faster to accept that money. The problem with informal commerce or informal commerce specifically accepting cash, because the cash they have the money right now. If I pay you with cash, you have the money right now. With a formal commerce using electronic payments, maybe you need to wait some days to receive your money. It's a problem. Also, accept digital payment is expensive. It depends of the country, but you need to accept rates from 2% maybe to 4 5% for any transaction. It's very expensive to accept electronic payments for formal commerce. That's why even people with formal jobs in the formal commerce, they accept cash or maybe they move to the informal commerce. It's a very strange situation, but we need to understand that happens in this economy. Most important also, it's very high inflation. In some countries here in Latin America, in Africa, in Asia, in many countries in the world, we have inflation more than 10% every year. So your money worth less every day, every month. It's impossible to live in that way. So people are looking for assets with less volatility or to preserve the purchasing power. If I have money, I can buy, for example, food for 1 week. Maybe I can save my money for the next week, for 2 weeks, for 1 month, for 1 year. I expect my money worth the same or have the same value in the time. What the problem with inflation? Your money worth less every month. Is a big problem, and that provoked in some countries people are looking for exchange the money for other currencies. For example, in Argentina are looking for the dollar, the US dollar, instead of Argentinian pesos. In formal or informal or an official market. Because, for example, in some countries you have government restriction on exchange. It's sometimes very difficult to access to other currencies. But the question is, can central bank digital currencies to be an opportunity for inclusion? The answer is yes, but we need to take into account the new or current product and service built in this new technology. We need to reduce some issues about the use of the new money. For example, people are asking about my money, my CBDC, my new digital money, has an expiration date. It's a very important question because it's my money. I want to spend now, maybe in 1 year, in 2 years, never I can save the money. It's my decision. We need to talk about that. We need to talk with governments and central banks to understand that. Because we expect this new money must also remove any type of authoritarian control over the use of the money. Again, it's my money. I want to spend in any product or service. It's not a money, for example, a specific money for food, a specific money for clothes, or for transportation. It's my money. I want to spend all in food, all in cinema, all in entertainment, etc. It's my money. I get that money from my job. We need or we expect central bank digital currency need to enable us in this context. The key is integration, because with central bank digital currency must be built to be interoperable and portable between different financial systems. We have right now the fiat system with banks, with governments, when you have your own or any country have their own currency, Chilean peso, US dollar, euro, etc. But we have two more financial systems. The blockchain, with many blockchain networks or protocols, Bitcoin, Ethereum, Polkadot, etc. And the new central bank digital currency, maybe this new money are using blockchain, maybe not, maybe other kind of technology. But we need to integrate all of them in a big financial system. Maybe in some point I want to use central bank digital currency. Maybe in my country in 5 years I have problems with or we have problems with our government. I want to move my money for protection from the CBDC to, for example, Bitcoin or US dollar, fiat, etc. The idea is people decide what is the best currency for them in a specific time. We need to integrate banks, fintechs, governments and central banks, and finally blockchain networks and protocols. That's the idea. The people decide the best money, not a specific government or just a specific blockchain network. People decide the best currencies for them. And we need interoperability, for example, using Interledger protocol from Interledger Foundation to integrate all networks in one big networks. Also, it's about integration with DeFi, decentralized finance. Why? Again, we have Web3 or blockchain application from many blockchain networks or built on public blockchains using smart contracts to, for example, create new stable coins or lending and borrowing money. In these new apps, exists the concept of the on-ramp. On-ramp means, for example, I want to use a specific cryptocurrency. I need to use my credit card or fiat currency to buy this new cryptocurrency. We can replace the fiat with a CBDC because it's digital money. For example, from maybe just an example, a digital Chilean peso. With this digital Chilean peso, I can buy, for example, Bitcoin are using with public blockchain to new decentralized finance, for example, to lending my money and get some interest every week or every month from my money. To win some money from or my money for saving my money. That is a concept. We can integrate the existing decentralized network with central bank digital currency. We can scaling solutions. We need to understand central bank digital currency depends of every country. Every country maybe are using a specific technology for the new digital money, but in scaling, we need to expect millions of people are using the new digital money, and we need to scale in this new global world. So, all the world is global, but the global economy. Maybe my Chilean peso I want to spend in a specific product in China, Russia, Africa, United States, etc. I want to spend and again interoperable between systems and expect million people are using our platform and using or integrate this CBDC with blockchain protocols, we can scale to all the world. For lending and borrowing, as said before, we can build new products for the digital money. We can create products or smart contracts um, for process for automatically uh, to send money to in a specific contract or with a specific trigger. On ramping to and off ramping to move from CBDC, a crypto or blockchain protocol, and from blockchain protocol to the CBDCs. Also for offline payments. Yeah? Why? Because for now, yeah, in the world, yeah, 1 billion people they don't have access to internet, yeah, yeah, because they don't live in cities. They live in some places where internet is not exist. Yeah. That's the idea to enable offline payments, maybe using mobile phones or using other technologies. Also, streaming money. Uh, with CBDCs, now it's cheaper to send and receive money. Uh, it's not with rates between 2 to 5%. Now it's very, very, very cheap. Send and receive money. And again, for example, the problem with access to the money in the right time, we can enable streaming money or money as in real time, to send, for example, money every day, every hour, every week, in a continuous flow. Maybe in some big companies can pay to their employees every day some part of the salary every day, so they can spend that money in the right time, and not depends of credit card or loans for paying, for example, some basic needs or bills. We transform from vicious circle to a virtuous circle of money. Embedded finance. Some years ago, in the technology world, we talk about every company will be a data company. In some point, some people are talking about in some years, every company will be a fintech company. Maybe not to sell products or services in the fintech world, but because they are using fintech apps on their apps, on their services, on their process every day. The concept, for example, of embedded finance. In other industries, maybe health, property, retail, transportation, mining, etc., we can integrate some financial system, financial platform to help in the process. Maybe with payments, lending. For example, in the health industry, you can enable insurance payments in a simple way, in a transparent or seamless way. It's very important. And with central bank digital currency, we can enable them in that. Again, this is digital money. With digital money, it's more simple to build new products, new embedded products, embedded finance in these new dApps, in new apps or current apps in other industries. And for example, you can also using interlayer protocol, again from interlayer foundation to extend products and service with other financial networks, blockchain protocols, and more. But again, what are the biggest challenges for central banks digital currencies? First, it's financial security. Yeah? Me, as a person, I have the rights to buy what I want whenever I want. I want to spend all my money in entertainment, in food, in travel, etc. It's my money. I want to spend. I I don't want to the central banks or governments decide a percentage of my money just can spend in a specific industry, in a specific needs. It's my money, it's my decision. Also about privacy. You can, of course, as to avoid, for example, money laundering. You can enable KYC, know your customer process, yeah, to know which person are using money, are using this central bank digital currency. But also, I expect some privacy. Maybe I want to spend my money in a specific or maybe a secret issue I have, maybe in health, but I don't want to share my information with anyone. It's privacy. Similar to the cash. With the cash, you spend your physical money in any store, but not anyone can know about how you are using the cash. Second, it's about ecosystem. Yeah. Central banks need to enable services to build new products or fintech. This for financial inclusion, we cannot expect just banks enable new people in the world to the digital economy. Why? Because the banks have a specific customer segment to get, to help, to to enable product and services. We need more fintechs, more, for example, neobanks, uh, build new products and services for example, for the unbanked or underbanked people. Uh, so, ecosystem where banks, fintechs, blockchain protocols, again, government, central banks can work together in this new economy, this new digital economy. Also about insurance control. Uh, one of the biggest problems with inflation is about the insurance, sorry, because governments are printing money every day. That provokes more and more inflation. With digital money, it's more simple to print or create more money from nothing. We need to regulate and be transparent with that. How the money is created. Maybe from with collateralize with some commodities or just how it works, for example, stable coins in the blockchain world, and or with other controls, but the idea is control how the governments and central banks are creating new money from nothing, just from the trust. Control that, you can control also the trust in governments and uh, central banks. And finally, the portability. Yeah. Again, maybe I have problems in my specific country. I want to move my money from, say, a digital currency to a Bitcoin to a fiat currency, for example, US dollar. In some point, I move from US dollar to the CBDC. The idea is a financial portability. Yeah. Again, users, customers, all people decide the best currency for them. So, the foundation of any inclusive system, is based on accessibility and opportunity. As I said, central bank digital currencies can be a great opportunity if we build properly, if central bank and governments control and build properly, yeah, this new digital economy. Thank you and welcome to this Financial Inclusion Week, and I might invite you to see and watch all other sessions. Thank you.